So what we're talking about is the fact that in recent years, people have shifted away from buying new cars and opting for more affordable used cars. Now, Transaction Capital is benefiting from that. It's one of the main reasons the business is looking to increase its stake in We Buy Cars. In its latest results, Transaction Capital recorded solid growth across its key segments. We've got CEO David Hurwitz, who joins me now to unpack the performance further. David, as always, thank you very much for joining us this evening. Let's start with the overall performance of the business. I mean, Transactional Capital was fortunate enough to perform as well as it did despite the current headwinds. But speak to us about some of the key headwinds before we get into, the key segments before we get into the specific ones like We Buy Cars and SA Taxi.
Thanks for having me on the show. I think, first of all, we're very, very happy with our results this year. Our growth rate is exactly in line with our average growth rate over the last 10 years since we've been listed, which is 17% growth in headline earnings per share, and slightly higher, about 20 or 20 plus growth in earnings. Really driven by We Buy Cars and Newton. Those two businesses have grown phenomenally. In We Buy Cars, we continue to take market share. This year, we traded on aggregate about 10,000 vehicles per month. Towards the end of the year, we were trading at 12,000 vehicles per month, and I think we can get to 15. We've done this through expanding our geographical footprint. We opened up the Dome this year. We've opened up in Mbombela. We've opened up in Polokwane. So a great expansion of our branch infrastructure, great expansion of our digital infrastructure in terms of lead generation and online trade, both buying and selling of cars online through e-commerce. And of course, we continue to build the brand. We've got first mover advantage, and I think we are definitely known as the best service to work with when it comes to buying or selling a car. Newton, there we've expanded our services. We used to be known as a debt collection or debt recovery business, and we've really broadened that to do more than just debt recovery. We do online lead generation, anything where a business engages with the consumer, so online lead generation, sales, online sales, debt, customer care, customer onboarding, customer service, dispute resolution, and then at the very end, retention and collections. In the past, we just focused on collections. Now we do the full spectrum. In addition, we used to do that mainly in South Africa and a little bit in Australia. And I'm very happy to say that 10% of our profits come from non-debt collection services for clients in the UK, but operationalized in South Africa. So using low-cost rand infrastructure to generate pound revenue, which is great. And of course, it's also great to employ people in South Africa, grow employment while they work in the UK, while they do work for the UK. And then finally, we faced some headwinds in SA Taxi. Lots of headwinds there. First of all, we had COVID with low commuter mobility. We have had higher fuel prices, higher interest rates, higher prices of the minibus taxi itself. Now we've had floods in KZN where the Toyota plant was closed, and that is the main product that we finance. So that business saw earnings go down, but really driven by the fact that we just could not get our hands on the product that we finance and insure. But all in all, I'm very happy.
No, absolutely, and I'm sure the shareholders are just as happy, David. Let's focus a little bit on We Buy Cars. I mean, you are looking to buy a further 15% in that business, and you have indicated that there's been a robust appetite for the used car market. But I wonder about the health of the consumer. Does this 15% that you're looking to acquire indicate to you, or as Transaction Capital, that the consumers are going to continue to get healthier, and so there's going to be that continued boom in this particular segment of the industry?
Look, it's a plus and a minus. What we've seen globally over the last decade is that as people get poorer, as the global population, which I see today topped 8 billion, but as people get poorer, they opt for cheaper second-hand cars as opposed to new cars. That's a trend which we've absolutely seen in South Africa. There have been some tailwinds in recent times due to COVID, where there were supply disruptions in the supply of chips, which meant that new vehicles weren't able to be produced at the rate that they historically were. So that's helped us. But then we see things like, as you say, affordability constraint around high fuel prices, high interest rates, etc. And that might dampen consumer confidence. All in all, however, we've got a very, very small market share, less than 10%. We are the largest, but we're less than 10% in a huge market. 11 million cars in South Africa, 1.2 million trading every year. And we feel that through all of the strategies that I just mentioned, we can take market share. We're probably at about just below 10%, and I think we can actually get into the 20s. So that will drive our growth.
You did say that SA Taxi experienced some headwinds in that there were supply issues that you faced because of what we saw happen in KZN. But interestingly, it seems from your numbers, it is still the most preferred form of transport for the average South African, and that's despite the higher fuel prices and the like. Your outlook on the taxi industry, but also the fact that it's still marred by the older fleet. And I'm just wondering if you're finding that there are new ones that are coming onto the scene now that things have stabilized quite or somewhat, really.
So I think what we see is, although there are headwinds that the industry has faced over the last 2 years since COVID, high fuel prices, high interest rates, typically what the industry would do is they would pass a fare increase, which would absorb some of these pressures. The industry has not done that during COVID because, trying to look after the commuter and consumer. We've only had one increase over a 2 to 3 year period, so that's not enough to assist the industry to be profitable. But structurally, South Africa depends on the minibus taxi sector. Bus and train are falling apart. It's not that minibus is so great, but bus and train is really falling apart. They now move around only 1 million commuters per day, and minibus moves around more than 15. So minibus is gaining market share there. People have to move around in South Africa, which means spend on minibus taxi transport or public transport, which gets captured in the minibus industry, is non-discretionary, and this protects our business. But there's no doubt we do need this industry to recover. In all of our numbers, we are expecting another flat year from the minibus taxi business. We've leveraged that business to now start financing second-hand cars, which is very interesting because we are the largest retailer of second-hand cars in the country. So that will allow us to earn additional revenue flows within the taxi business. But next year, we'll see the taxi business remaining as is, maybe slight improvement. In 2024, we should see a better recovery. But in the meantime, our Newton business and our WeBuy car business continues to grow at an alarming rate. And, we think that our results, I'd be very happy to be sitting here next year this time with a similar set of results. So, that's the plan. Taxi flat, but the other two up. And when I say similar for TC, all sitting at about high-teen earnings growth would be great. And I think we can do that.
Just a final thought from you, David. There's a lot of talk around climate change, and we're actually just finishing off with the COP27 climate conference in Egypt. And I just wonder, with the business that you have and the model that you follow, the industries that you're in, is there any consideration by TC as yet in terms of how you will move to incorporate the conversations on climate change and changing the different products that you offer to accommodate those changes in the near future?
Absolutely. So ESG is an integral part of our business. I think we've already done very well on some of the kind of low-hanging fruit in the way as to how we operate. For example, we harvest our own water at WeBuy cars and wash our cars for the majority of the months of the year, more than 9, using harvested grey water. We have solar panels on all of our large dealerships, which allows us, to be off the grid. In SA Taxi, there we are taking older, less efficient vehicles off the road and replacing them with more efficient vehicles. Unfortunately, they still are fuel vehicles. We've piloted with an electric vehicle, but it's just too expensive. And I think if you want to try and get that, it retails for about R1.5 million. If you want to get that vehicle into the sector, we do need some type of government support. So there's a lot that we're doing, and it is absolutely at the forefront of our minds.
Thank you so much for those insights, David Hurwitz, for joining us this evening. He's the Chief Executive of Transaction Capital, talking us through the numbers that they reported on today and really just the outlook, taking into consideration issues around, for example, climate change.